What is going on, everybody? Welcome to another training video. In this video, we're going to be talking about candlesticks. We're probably going to have a few videos on this exact topic on the YouTube channel because I think when it comes down to candlesticks, you can't fit everything in one video. So we're going to start out with this video when it comes to the topic of candlesticks and maybe understanding them a little bit more, as candlesticks are something I think you need to spend time with on the chart because they're what's in front of you every day. The line chart is also a very important tool in your analysis. I've talked about that in some other videos, but when it comes down to the candlesticks, you want to get familiar with them. You want to spend time watching the candlesticks and how they behave. Candlesticks are essentially patterns in the market. They can be different variations of patterns. Singular candlesticks are really popular. There's also double candlestick patterns in the market, but a candlestick can help us interpret what price could potentially do next or give us a confirmation on when we should enter the market. So let's talk about what a candlestick is real first before we dive into the charts. A candlestick is a type of chart used in Forex to show the price movement of a currency pair or any specific asset during a specific period of time. So each candlestick gives you 4 key pieces of information. Number 1, the price when the time period of the candlestick starts, the opening time of the candle. Number 2, the close, the price when the time period of the candlestick ends, so when the candlestick finishes. Number 3 is the high, the highest price reached during that time period of the candlestick. And then number 4 is the low, the lowest price reached during that time period of the candlesticks. Candlesticks are colored to show whether the price went up or down during that period of time. You're going to typically see green and red candlesticks when it comes to a chart. A green candlestick indicating a bullish momentum in price, meaning price went up in that duration of time. That means the price closed higher than it opened, so the market went up when it comes to a bullish candlestick. A red candlestick or a bearish candlestick means the price closed lower than it opened, so the market went down in that period of time. If you're a new trader, there's 3 really common candlesticks that I really like to utilize and analyze in the market. When I see them, it gives me more confidence of a confirmation. We can use candlesticks for entry confirmations. In this video, I'm going to teach you guys about something I call the rejection candlestick. Candlesticks are patterns, and they can interpret for us where price can go in a certain direction. They can pretty much act like a support and resistance if I were to simplify it. These are 3 strong reversal candlesticks that you're gonna wanna get familiar with in the market. They work really, really well for spotting reversals or shifts in the market, kind of like a support and a resistance when the market's at a high point or when the market is at a low point. So when it comes down to the basics of your candlesticks, it really also is understanding time frames, your time frame basics, because the time frame is how long each candlestick represents. For example, if I'm on a 1-minute chart, that means each candlestick shows movement minute by minute from opening to close. If I'm on a 15-minute chart, each candlestick shows price movements every 15 minutes from when the candlestick opened to when it closed. So if I go to a higher time frame, we have our higher time frames and we have our smaller time frames. Higher time frames can range from monthly, weekly, daily. If we go to a monthly, that indicates the current month. Like if we're viewing the candlestick charts right now on the monthly chart, that means we're looking at the current month of price. So when we look at price right now, it's bullish on the month. The month is bullish so far. That candlestick indicates this month. The previous one indicates last month's movement, the one before that. So we can break down the charts month by month. We don't really look at a monthly so much. I mean, you can see the monthlies in a strong uptrend. We can break down the month. For instance, this is October we're looking at right here. If I break the candlestick down to a 1 week, I'm gonna now see weeks. For instance, if I put a line here, there's the end of September, AKA the beginning of October, right here. If I break it down to a daily, right, I'm gonna put the line right there. There's October 1st, Tuesday, October 1st. When I work up, I get one candle that shows me the month. When I work down, it breaks it down into weeks. When I go to the daily, it's gonna be showing daily candles now, representing a price movement of 1 day from the open to the close. These are days. We can see we're in the month of October here. So far for October, this much price has passed. This is the lowest point of October right now. This is the highest point we can see October has been in the month. So on the first day of October, price went up and then it started a downtrend. It actually went down for 1, 2, 3, 4, 5, 6 days until this green candle. If you see this candlestick here on the daily time frame, this is one of those 3 strong candlesticks actually. When we go back to that chart, that is a bullish engulfing candle. That can be typically at the bottom of a downtrend, signaling a potential reversal in the market. On the next set of candles, you can see after the bullish engulfing candlestick here, the market rejected, pretty much formed a support, and we've continued to the upside. The daily gives us a good view of the chart day by day, showing us was price bullish or bearish today. Now, if we go to a 4-hour, for instance, and we look at a 4-hour chart and we go to settings and we put this tool on that's called session breaks. Boom, right here. What is this tool showing us? It's showing us when the opening day begins. So when the day begins, AKA when the previous day closed. So what is this sessions break tool showing us? It's showing us the market day by day. All right, these blue lines are the opening or the start of the day and the finish of the day going on to the new day's price action. So when you're looking at a 4-hour in your day, you have 4, 8, 12, 16, 20, 24 candles, right? You have a set of 4-hour candles in your day, right? So the market's gonna move up or down, have more bearish or bullish momentum in your days. If we break down the chart into hours, so we go to the 1 hour, each candlestick represents 1 hour of price movement. This is a 1 day of price. This is the next day. This is the previous day. This is the current day that we are on. So when the day's finished, another blue line will show up here when the next day starts to begin. So that's your sessions break. It can kind of help you gauge in studying your market sessions because you can look at, okay, how did the market move in New York? How did the market move in Tokyo? Because in every 24 hours, you have your New York, London, Tokyo, Sydney session, right? You have your different market sessions that can play a role in this 24-hour time period. So that is kind of some basics when it comes to time frames. When it comes to time frames, depending on the time frame you have selected, that is how long each candlestick is going to represent. This is key to note because as you spend more time on the charts, your eyes may get trained to specific time frames better than others. You might be more accustomed to seeing patterns on the 1 hour, or maybe some of you guys more patterns on the 4 hour. I know some traders who are really good at seeing patterns on the 5 minute using candlesticks. So we're gonna go over another topic right now and talk a little bit more about something I call rejection candlesticks. Because over time, spending a lot of time on the charts, I pretty much realized a candlestick is like a pattern and it can be almost like a support and resistance. Candlesticks can indicate when there's potential weakness in the market when it comes to an uptrend, or they can indicate when that weakness is shifting over to more strength in the market. So candlesticks give you more of a visual illustration of what can happen next, what price could do next. They can give us a visual representation of where a resistance is forming based on candlesticks rejecting. So if we look at on the left, for instance, here, let's say this represents a 1 hour time frame or a 4 hour time frame. It could really represent any time frame, but let's say it represents a 1 hour chart or a 4 hour chart, meaning every candlestick here is 1 hours of price going up until here. So what I like to look for in my candlesticks when I see a price move really going up, especially within your market structure, because one thing you'll learn about your candlesticks is they flow a lot in your market structure. So when I recognize the market's high and it's pointing down for a sell, I like to pay attention to the market structure and the candlesticks when they start to reject. Because the idea of a rejection candlestick is something like this, where the market is showing a sign of weakness where the bodies of the candlesticks are getting smaller. You have wicks on the top of the candles. These types of candlesticks can signal potential entries in the market when your market's more at a peak, or vice versa, when your market's more at a bottom. If you have a market that's been falling for some time and the move starts to die down, or you have a market that's at a key level of support, you can use candlestick confirmations to identify, okay, now we have a potential close in that direction that the market is pointing. Let's say you have a support level. You don't just have to directly buy right when the market touches that support, or you have a key level that you've identified. I'm gonna show you guys in this video how I look at key levels using candlesticks as we go to the charts. But just to get a little visual representation and idea and understanding before we do that, if you have a downtrend and say the market's coming to a support or a key level and you're looking for a trade, it's key to wait for the candlesticks to close in a bullish direction when you're looking for that move up. Because typically after you get that close, especially if it's on a 1 hour or a 4 hour chart, that next candlestick is gonna typically give you that bullish direction coming from this rejection candle. So we're looking for really like a constant movement in the candles, a good flow down or a good flow up, taking out potential liquidity as well, or a good structure point in the market. If the market's at a lower low, or if the market's at a higher high, to simplify things is what I mean, that could be a point where we know the market's gonna shift down or where the market's gonna shift up. We're waiting really to spot signs. These are signs or clues to where we could understand, okay, the market's getting ready to shift. When we go to the charts, this happens a lot. And I wanna show you guys some examples on gold and on Bitcoin in this video. So for example, like here, when we look at what a rejection candle is, simple setup right here on the market where you have a support formed and there was a rejection candle there, but that's not what I'm looking at. I'm looking at the fact that we broke underneath this level and we created a lower low and we trade up back into that level. So there's a strong candle that pushes to it. That next candle is a sign of rejection. Those are the types of candles I like to look for in confluence with zones, with support and resistance, with key levels, or even in retracements in the market. So this is like an example of a break and retest, and you get a rejection candle in there starting a move. So what I've noticed, especially on the 4 hour chart, is one candle can pretty much start a move, right? It can start a high or a low, especially on a 4 hour, because the 4 hour is kind of in the middle of a higher time frame. If you look at the example on the right here, we have another example where the market forms a high here and it breaks through it and it comes back. So it's not always about buying right when the market hits that level, because if you see, we have a nice rejection candle here. So after that candle, it's more, okay, this candle represents a support made here. So it's more after that candle, we can look trading potentially to the upside. Same with this candle over here. If you're looking at rejection candles, it's finding an area, finding a valid zone, using different techniques, like some of the ones I mentioned not too long ago, and waiting for that confirmation candle. They can appear on any time frame, and I think your goal is to practice from the top down. Work your way to the top down, because the smaller time frames are really frequent and less is more. I think the higher time frames provide a better visual quality. I think they're more concrete really in the way they flow, and there's not as many candles that kind of get in the way and interrupt that, I would say, cleanness in price, right? So a rejection candle is just simply like kind of like a support and a resistance. You have one here on a break and retest, and you also have one here on a break and retest. That's kind of the stuff you're looking for. Rejection candles can be at areas of resistance or key price levels. Key price levels can be like quarter levels, $5 levels, $10 levels. So for instance, 25.25 here, right? When we look at 25.25, we know that's a quarter level. So when we look at the way price is trading at this quarter level, we can see some rejection candles here. One of them is actually one of these candles here, the shooting star. The shooting star is one of my personal favorite candlesticks on the 4 hour chart, because I've caught some of my best setups and signals with it on gold. And when we look at the chart, here, we actually have a pretty good one here. Now, what do we have? We have it at a resistance, and we had it at that quarter level, that 25.25 level. You can even see another time when the market punched up to that 25.25 level, aka previous resistance over here. The market was basically in a range here. These are the idea of rejection candlesticks, guys, what I was going over before here at the top. The idea of potentially finding a key level of resistance in the market. It could be a high level in structure, a higher high, right? It could be an order block. It could be just a regular resistance point, right? Finding a key level, even a whole number. For instance, I'm going to show you on Bitcoin in 1 second what I mean by the whole numbers, and this is an example here on gold. If you look at some of the bullish rejections, like where are strong bullish moves starting? So how I like to view the market when it comes to the candlesticks is, where are the moves starting? Like here, there's a move starting, right? So I can see price had a really strong bearish move down. What candlestick do you have there? You have a hammer candlestick, which is going to be the exact opposite of our shooting star candlestick. Right? We have our shooting star bearish, and then we have our hammer candlestick, which is bullish. So these right here that I'm circling are rejection candles. The next set of candles go up. So if we're looking at the market at a point like this, if we're looking to the left and we're like, okay, what do I see here? I see a previous resistance point. I see a previous structure point that we broke out of and we retested there. Interesting. When we tie some things together in here now, right? When we look at what is the market in, more of an uptrend if we really zoom out, right? So when we look at tying things together here in the market, we have a previous resistance, we have a breakout, we come back to that level. Do we have to pull the trigger right away? I mean, if you're speculating on smaller time frames, but you could simply wait at these types of key levels. You can also see 24.75 quarter level. Market rejects, next candles go up. So that's one thing I wanted to get you guys to understand in this video, and hopefully you guys understand a little bit more about the rejection candlesticks. Last thing I want to talk about is this chart right here. Let's scroll it down just a little bit and let's go to Bitcoin daily chart and talk about rejection candles. So if you're familiar with Bitcoin and you know Bitcoin, it tends to respect whole numbers like gold. We've made some videos on this. So when you look at the prices of Bitcoin, and when you think of like buying and selling in the market, you think about people buying and selling things, people want to sell things at a higher price than what they bought it for. People are looking for lower prices. So whole numbers can help us kind of like gauge in finding some of those higher, lower prices of value where the market tends to respect. Like for instance, if you're looking at 71,000 here, key level. The key level to me is just a round number. It could be on Bitcoin every $1,000. Now when I look, so before I was talking about how if you have a support level or if you have a key level, you don't just have to buy it right when the market touches it. Why do I say that? Because the market can come to your key level and push through it and still reverse. And it can close above it. This is something really important to understand with this concept, because you could have a key level identified in the market. This is something really important to understand, because you could have a key area marked out on the chart that you think price is gonna respect, and it can usually do maybe something like this before it makes that move up, or vice versa, right? If price is going to a resistance or you have a key level where you're looking for sells, a lot of times you might have something more like this happen in the market, and then that move comes in. So the candles, how might the candles look in a situation like this where the market does something like this? It could be green candles pushing up. It could be green candles pushing up, green candles pushing up, breaking, but this turns into a wick, right? Oftentimes you'll see the market reject somewhat like this. Let's color this up a little bit. So oftentimes what can happen is a wick is formed, a long wick, and the market can still close below or above your key level. It happens on Bitcoin a couple times when you look here at price. When you look at the daily time frame, for instance, let's say anyone who is buying at 55,000, the market was pushing down, really bearish on the daily. What they should have waited for instance, was price to close in the bullish direction. Or something like here, for instance, where price really whips down. And you can see none of these key levels, none of these key prices are really respected until 50,000. So it's like the market was very bearish here, going through key support levels. For instance, look to the left. What do you see on price to the left? You see a support here, right? Around 55,000, which is a whole number. What does the market do when it comes there? It actually goes through it. But overall, the price still closed above that key level. It actually still held that price. So that's something you have to be cautious for when you're looking at these price levels. But overall, when it comes to like rejection can look simple like this. When I say rejection candle, think of it as something like this at 68,000 on Bitcoin, where you have this daily candle rejecting at a key price. So this could have been a time where maybe there was also greed in the market, maybe extreme greed, or a time where the market was overbought. But I'm simply just looking at a daily time frame, and I tie in the fact that whole numbers really do represent support and resistance levels, or key levels like we like to call them. When you look at the candle here, what does that tell me? Like, if I'm looking at the market at that point, what's that giving me in terms of clues or evidence, right? That is a sign that, okay, we could potentially shift down on the next candle. That's how your candles really work in a way when it comes to rejection. We got a rejection on the daily, the next day could potentially go down. If this is a 4 hour, it could be the same concept, or a 1 hour, the same concept, right? After that rejection happens, the next day goes into sells. And then you come down to 65,000. And I want you to pay attention to what happens here at 65,000. The market doesn't just stop right away. It actually goes through 65,000. So think about anyone who was long here. Anyone who was long, what would have happened? So anyone who was buying the market at this point, when it first arrived to 65,000, they probably would have got stopped out, because stop losses probably would have been at previous low structure. That's a pretty big stop loss when you're measuring it in Bitcoin, right? Unless they had their stop loss all the way down here, right? So think about what happened here. The market comes down, and what candlestick pattern does it form? If we go back to here, go back to the little guide here. Remember, these are 3 strong reversal candlestick patterns. There is many more, and there's a good handful of candlestick patterns. After watching this video, guys, you should have a better understanding of the importance of candlesticks and how to use them more effectively. Be sure to subscribe, because we're gonna be posting 1 video a week, every single week on this channel. And also subscribe to my Instagram, guys, because I'm also gonna be posting content on there every single day. If you like what you got from this video, remember to comment down below the word candlesticks, and I'll send you guys a free PDF of the top commonly used candlesticks and how to use them effectively.